Matron, take them away.
Old Scruffy had a farm, E-I-E-I-O, and on that farm he had an account, E-I-E-I-O, with cash over here and cash over there, here a cash, there a cash, everywhere a cash, cash. Yes, it's me. And what am I singing about farming for? Well, most of you will probably think because I'm an idiot.
You know, you're a classic example of the inverse ratio between the size of the mouth and the size of the brain.
And you're probably right. There's not a lot rattles around my bobbly little head. But if you're going to watch a video on trading, this is the one. This will probably be the most important video I've ever made. And if I never do another video again, I hope you remember this one. Trading to me is my job. I love it, but it's a means to an end. But it's also a professional career. And if you don't treat it as such, you finish before you start.
No way!
And that's why we're going to look at a farm, a small holding today, and think along them lines. Now, I know this might be off track, and when I go on the whiteboard, it'll make it very apparent. Now, what I'm going to do to start with is I'm going to kind of show you where I'm going, because we're going to end up with 4 accounts. And this might think, whoa, what the hell do you play? Fucking 4 accounts? How on earth can you control that? Well, it's easy. I control multiple accounts. Go find a video about time management and you'll see how I do it. And I'm going to start by showing you the Black Bull account. Now, Black Bull is an excellent account to start with, small, because it's one of the few that are fully regulated but also have 500 to 1 leverage. Now that leverage you can use to open any asset you choose with micro lots, and then you use the micro lot gauged on your amount of money. Now what we're looking at here is an amount of money that started at £200, but I was able to trade gold, I was able to trade DAX, I could trade anything I wanted. I've predominantly been trading gold on this. Now, it started at 20 pence. And we've grown this account from January to 608. And you've seen the journey. And the guys in the squad have certainly seen it every day because they're doing the same process. This is a 204% growth. All right. We finished the day today. Obviously, the month today, rather. And you saw me scalp that out live this morning. Doesn't look a lot, but all these little amounts have added up, and it's actually grossed me 20%, well, more than 20% this month, smashing the target that we put in. Now, on small accounts, these targets are quite doable. On big accounts, they're not. And this is one of the downsides of the industry. The industry is sold and marketed in such a dirty way. You don't know your arse from your elbow. You really don't. Because when it's the prop industry, you think it's big numbers. It's not. You're on the drawdown. When you're looking at Darwin X, they tell you to draw to make 2%. You're not. It's 2% of the Darwin. Could be 10% on your Signal account or even greater. So again, marketing is not good. But it's not to say these programs that you can buy into are not worth it. But ultimately, your own account is number one. It has to be. Why? Because you control it. And that's what we're going to go into on the whiteboard. Now, the accounts that I've just mentioned, I'm going to quickly show you them and you'll see where they fit into the equation. And there will be 4, and I'll show you. So what we are proposing to do, if I come back here, is farm the profits. We're going to build a small holding. We're going to rent fields, and we're going to buy livestock and barley, and then eventually fruits. And I'll explain it. But how are we doing it? Well, we're going to start with the Black Bull, which we have just been sort of looking at, and you pull it through It's this type of account here. It's a hedge account. Use a hedge rather than a netting. It's far easier to work. And it's MT5. And all of the programs that we're going to be looking at, whether it's the 5%ers. Now, this is the only prop fund that I recommend. Again, if you want to try it, there's a discount code in the description. And of the three, there are different elements you can look at. You can look at hyper growth, straight to market. You pass the first evaluation, you're running. But it's quite expensive to get in for what we're going to do for this purpose. You have the high stakes. It's exactly what it says it is. It's high stakes. It's cheap, but it's not particularly easy. You've got to over leverage in order to achieve, or you've got the boot camp. Now, my preferred choice, if I was looking down the ranks, would be 1, 2, and then 3. From a cost perspective, it's this one, the boot camp. You can buy into it for very little money, and you end up with a 100k account that can give you decent profits. Again, when we're on the whiteboard, I'll explain this. But it's that figure that we're looking at. And then you have Darwin X, which is this. Now, what this enables you to do is build up a portfolio of seed accounts. Each one of those seed accounts will pay you, and that'll pay you future dividends. And if you're good enough, after 8 months, you'll be able to get outside investment, which will again accelerate these. So I hope that kind of gives you a quick broad stroke of what we're doing. But let's talk about farming, because that's where this trade is all going. And then finally, that farm is here to produce this. Now bear with me just a second while I log it in. Didn't want to show you my passwords, obviously. This is a Vanguard. Now this Vanguard is an investment portfolio. At the moment, I'll be reinvesting everything tomorrow for the new month, because I turned a lot of it into cash as the S&P 500 was on its downward move. It seems to have settled down, so I'll be starting to reinvest back into this as of tomorrow. But what you're seeing here is 79,000, which is being built purely from farming. Let's jump on the whiteboard and I'll show you what that means.
Well, we're waiting.
Okay, boys and girls, let's cut through the noise of Forex. And why is farming part of this? Well, it's all about reinvesting your profits, but reinvesting them in a smart way. A little bit like our farmer would. Now, I'm going to have a quick slurp because my throat's a bit dry and we all know Scruffy likes a coffee. Oh, dear me. And that's about the only instant thing that's good, because I like instant, I like Nescafe. But your profits are not instant. You've got to build them up. Now, if you're just starting out in business, there was an old thing that was told to me when I started 25 years ago. And it's a 3-stage. Now, it can be 3 months, 3 years, however you want to set it out. But basically, it's a 3-year plan. The first year, you feed the business. The second year, it feeds itself. And the third year, it feeds you. So you need that in your mind. Now, when it comes to farming, farming is planned throughout seasons. You're preparing the land and getting everything to be done in the autumn, winter. In the spring, you're prepping your seeds for your harvest at the end of summer. Why? Because it all takes time. But it all starts at the beginning. What if you've never had a farm before? You've come into a little bit of money and you buy a small holding. So you've got your small holding here. Is that going to generate you money straight away? No, not with plants and not with wheat and barley and potatoes. It's just not going to happen. But you do need some income coming in. So you've got to think a bit smart. You can't afford staff. You've got the ground that needs treating, you know, it might be all overgrown, all this sort of thing. So think outside the box. That's what we're going to do here. This is all a metaphor for trading. So what's the first thing you would do? You'd look for livestock, because livestock can bring you money relatively quickly, whereas produce, wheat, barley, potatoes, you've got to grow them. It takes time. So buy a bull. So you buy a bull. What the hell is a bull going to do? How's that going to make you money? Well, first of all, it's part of your labour force. And the bull, in this instance, is the black bull account I was talking about. 500 to 1. Big bugger. Right? But it's going to trample the grass. It's going to eat the grass. It's going to start cutting the lawn for you and prepping the land. That's the general idea. It's also going to be pooping a lot. Because, let's be honest, bulls and cows, they poop. Natural manure, so you don't have to buy it. So you're recycling what it's doing. But you can also buy a cow. So you buy a bull and a cow. Both of them are eating the grass, sorting stuff out. The bull can impregnate the cow, which increases the herd. So you're now recycling within this little small holding. That's what the leverage is doing. You're using the leverage to open up any asset you want, and you're using micro payments to build up small profits, increasing the herd. Now, a cow will also produce milk relatively straight away, or very quickly. So you can now put that milk into market. Get some income coming back. Now, what do we do with this income? Well, first of all, you needed a baseline. Well, that baseline was the bull and the cow. You needed to get it up. Now, when I was showing you how to count, it's up to 600. I wasn't going to do anything till I got to a baseline, which was 500. Now, on the way up, you earn the right to add little bits of money into it. So say you could set yourself a target of 300 and you add 100 to it. Earn the right, recycle the profits, all that sort of stuff. Or if you've got a little bit in your pocket, shove it in that count. Now I've got it to 600. I've got a baseline with 100 spare. That means I can use that milk money to go to market to do other things. It's not enough to fund another account. And it's certainly in a farming situation not enough to buy another field. But I could rent one. So I use the $100 or 100 quid that I get each month now to rent a field. Now, that field needs to work for me, and I want to plant it. And I know whatever I plant in that is not going to be instant. So every month, this is paying for this across the summer till the harvest comes. But there are two ways you can look at this. You can have hardy products that really can take a lot of punishment, and then you can have some that are not as good. So if the harvest fails, it could be a bit awful. So what you have is you have ground product, potatoes, turnips, carrots. They're quite hardy. You can harvest them, sell them to market quite well. And then you can have wheat and barley on the top. Now, obviously, if you get locusts, they're going to get knackered. This sort of thing. So split your field in half. Meat and potatoes. 5%ers. Why is that? The boot camp is cheap. And certainly cheap if you use the discount code below. You are still in training wheels. It's perfect for training. You go through your evaluations earning the right, but at the end of the summer, you'll get a big account. And that big account will put money back to your small holding. Right? So you've got a cycle of money coming round. You've used the money from this to buy that, and then the profits of that goes back to repay it. Self-fulfilling. But I've got two parts here. What about the other side? Well, it's your Darwin. Now the Darwin, whoops, say, I was going to call it Darwin Infinity, it's actually Darwin Zero. The Darwin takes a little bit longer. You can get your seed money sort of within the first couple of months, but ideally you want to give yourself about 4 months. Then you want another 4 months in order to get outside investor capital. It takes time and it's quite tough, because when they talk about 2%, it's 2% of the Darwin is the growth. You might be growing 10% on your signal account. So you've got to be a bit careful of that. So you've got to plan it out. You've got to do it properly. All right. They're not bad accounts. They're really not. But it makes you think long term all the time. But are you going to put that profit straight back into your other account? No. You now might want some fruits for your labour. And those fruits are going to take even longer to come, because we're now going to rent another field. But in this field, we're going to have to plant trees. And the trees are going to take years to grow. But those trees can produce apples, pears, orange, whatever, fruit. Fruits of your labour. Then that can be sold to market and actually turned into wine. Because you might have grapes, apple cider, anything you want. What I'm driving at is, you start with a small holding, just here. You recycle the profits to buy a prop fund. It's month one, because you've got 100 quid. Once you've purchased it, it's fine. You then just trade that along. Then the months coming after, because Darwin costs you about 38 quid a month, that 100 quid will now pay for the Darwin as well and have change. Now you've got these two accounts building up across the summer while you're still working your little account, earning your money. And then when they come into fruition, you can start funding your own account again off the back of the profits. And then the other one down into an investment account like the Vanguard, and just let it build up over a long period of time. And then that period of time would then give you the fruit of life, or the wine of love, whatever you want to call it. It'll look after you. So this is a long-term process, but it can be done within a 12-month period. Start small, allow it 3 or 4 months to build up to a baseline. Once you get that baseline of 500 and you look to do 10% a month, which is 50 quid, that'll easily pay your Darwin off. If you've done very well, you can buy your prop fund. If you fail your prop fund, you can buy another one off the back of the small holding. But once you've got through these training wheels and you've just slogged it through, you've prepared your land in the winter, you've planted your seeds in the spring, you've done the harvest at the end of the summer coming into autumn, and in the autumn you enjoy the fruits of your labour. That's farming profits. It's thinking smart. It's using one account to fund another account, and then that funded account rebuilds your live account because you want control of it. You want investment accounts, which is your Darwin, which will fund another investment account that just sits as passive income in the background. Job sorted. Now, isn't that a simple way to trade? It's planning. If you think for a second you're just going to go to market, press a couple of buttons, and you're going to turn 100 into 500, 500 into 1,000, 1,000 into 100,000 very quickly, you're in la la land. But if you plan it out and you think about it carefully, it'll pay off. And how do I know? because I've done it. And at the start of this video, I showed you an account that was built doing this exact same process. Don't think anybody here would sniff at 80,000 quid. Something for you to think about. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.